All right, guys, we got a big show tonight. Here to help us out, the investment pros. President NewOak Capital, Jim Frischling's with us. President and CIO of A&G Capital, Hillary. 80% of Greece's debt is held by outsiders, and that's no Western country has that many people, hence why they can hold the rest of the world hostage. But I mean, are we taking Greece too seriously, though, Jim?
I think the probability of Greece leaving the euro is fairly low, and I put it at less than 25%. That said, what would happen, the contagion, reminds people of 2011, 2012, and while Germany's saying that the euro could withstand a Greece departure, I think they're underestimating the carnage that would result. To Matt's point about how banks underperform, Hillary just mentioned it, the banks own exposure to Greece, the banks lend to a lot of these marginal oil companies, so I think you're seeing this correlation, low oil, threatening, concerns about Greece, and the banks sold off.
But Germany did call their bluff overnight, so I don't know about that, but I will say the Treasury market is known as, the stock market gets manic, but the Treasury market's always considered the canary in a coal mine. The yields keep going down. People don't understand. How can you have a 5% GDP number and yields are going lower and lower and lower? Somehow it feels like Treasuries yields in the Treasury markets reflect Main Street more so than the stock market.
I actually think it's a great point, and it is reflecting the mood right now, which is a flight to confidence, a flight to safety, for an overused cliche. Look, we talked about utilities overall doing very well. That's been a flight to quality. So I do think there is, people have been, in 2014, they were betting the bond market was going to collapse or was going to go the other way, and they missed that call. And I think people might be underestimating, actually, the performance of the bond market this year. If rates move, they're going to move slowly.
I'm just worried about what the message from bonds are. Why are yields this low? It brings us to our next real deal. Let's talk about money flowing in the economy and now what's holding it up. Okay, and by the way, 2015, will we see a change? Jim, it's sort of like chicken and the egg to talk about money flowing through the system at a faster rate, but people hear about the corporate profits, people hear about the Fed printing money, and they hear about all this great stuff coming on, but the money's not circulating.
So let's break into two categories. Consumers, not spending, trying to pay down debt. Matt said they're fearful. They haven't made their money back since the collapse. Businesses, you highlighted, it's taxes, it is regulations, and right now, truthfully, it's the dysfunction in Washington. So you want to know what can change it up? I think it's going to have to start at the business level. I think we're going to have to see either a tax reform. You highlighted what that can do for businesses spending and for the velocity of money. Maybe actually Washington doing some across-the-aisle agreements and getting things done. But businesses, I think, are going to have to start the moving process, and I think it starts with tax reform.
Yeah.
Jim?
Home Depot, e-commerce, home building, housing recovery. I think the economies of scale that they're getting, their margins continue to grow. They are using their size to their advantage.
I had a critic who told me Home Depot is the worst example or the best example of corporate engineering. All they've done is buy back stocks and increase dividends. They're not making any more money than they did 10 years ago, and the company itself isn't growing. What would you say to a critic like that?
I will tell them to revisit that stock in a year from now. Let's talk about it, because if they're not going to continue to buy back stock with the same vengeance, I actually think their margins, to me, look very attractive. It's not easy to be a small player and compete against Home Depot, and that's why I like Home Depot.
In fact, for a while, they were cannibalizing themselves. Okay, I got to tell you, though, there will be one part of the economy that's not going to benefit, and that's union membership already waning. This freelance aspect that Joni just talked about of the on-demand economy, I think is going to be the final dagger. Now, take a look at that chart. Unless the administration does something nuts to intervene, Jim, I think this could be it. I think this could be the final nail in the coffin of private sector unions.
Well, this new economy is great for consumers. I mean, we get to be big shots tapping into this specialization. It's great for workers that want flexibility and will give up the security. But to your point, it is terrible for the workers that would value that security, value being part of a big company. And this could be the death nail. And I do see it going in that direction. Middle-aged, particularly, I have to say, folks that are a little more conservative, this is a problem for them. They're really having a hard time keeping up with this new economy.
It's going to be another reason for you to invest the money that you earn. Okay? Check out Amazon. You're going to have a lot of, I'm not joking, you're going to make a big time money. You'll make a lot more than minimum wage. What do you think, Jim?
Rather than looking for gold, I decided I'd go with the pick, shovels, and blue jeans. So all of these on-demand companies are going to need a tap into smartphones. And the best smartphone provider is Apple. So again, I don't know who's going to be the winner of the next Uber, but you're going to need your Apple iPhone to get access to it. So I'm going with Apple.
There's no doubt about that. What about you? I've been intrigued with Bitcoin from the very beginning. I love the fact that there's no government that controls it. I don't trust the way, the formula, and that it's foolproof and that there will be a limited supply. But libertarians love this, and a lot of people just like the idea of having a currency that they can transfer money without any government putting their paws on it?
I think the ecosystem that is Bitcoin is very important. To Matt's point, it is here to stay. The Bitcoin itself, New York shouldn't take it. It's far too speculative. It's far too volatile. Right now, the speculators are dominating the market, and I would not want New York. I'm okay with the $600 million coming in because it's usually about a tourist to get those parking tickets, and then the city can use the money.
I don't
but
know
I'll say this: I don't want to be owed money from a Bitcoin because I don't know what's going to be worth tomorrow. Far too speculative, but the ecosystem is here to stay.
Well, I'm from Jersey. I guess they must consider me a tourist because they've been hitting me up pretty good. By the way, Kevin Plank, I think, has done an amazing job. He's a great Horatio Alger kind of story. I did have a little bit of problems because initially, like years ago, they pledged that they would never use professional athletes, and of course now they're signing some questionable people. But nevertheless, I think that this level, this is going to continue to be a winner.
I mean, I guess women and young people and Jimmy Frischling, because I buy our Under Armour.
What are you benching now, baby? You're looking fit, man.
I like what they do. To Hillary's point, I think a lot of the good news is priced in. I think they're executing incredibly well, despite the fact that, yes, they broke that promise or rather broke that commitment, and they did go pro athletes. But I do like what they're doing, just a little expensive for me.
All right, guys, just got a tweet from someone saying, Charles, is this a pullback or is this the beginning of the correction? Could you answer that one, Jim?
I think it's.
I didn't want to answer it.
I will go with a pullback. I think the Fed is going to be more accommodating. People are overestimating that risk. And I think we're going to have a good jobs number on Friday. What worries me a little bit is Europe because it's a concern, and I think it's getting a little worse right now.
Well, let's go to our